Hi guys, so today we'll be going over yesterday's trade. It's just a quick 1 to 2 scalp. We'll actually use the MNQ chart today instead of the Nasdaq 100 because the reason why I use Nasdaq 100 even though I actually trade NQ futures is because the chart that I have of NQ is not updated in real time, so it's like 10 minutes behind, and I need to pay for that one, so I haven't decided to pay for that one yet. So right now when I trade NQ, I actually use the actual the trading platform itself has the updated timing for the chart, not on TradingView though. So on TradingView I mark it up on Nasdaq, but on Nasdaq 100, but on the actual trading platform where I take trades, I use that chart which has that updated time. So the reason why we're using this one today is because the charts are actually slightly different. As you guys can see here, we took out this low here, but on Nasdaq we actually haven't taken it out yet. This one takes priority over that one, so I use this one. So yeah, we'll go over the trade analysis on this one today. So basically the trade is around here. Yesterday I took a long, and we'll start on the daily. So on the daily right here, I actually really want to be bearish. Like we were heading back up this previous leg, but we got this daily fair value gap here that we closed below, and we also have this daily fair value gap here, which is our drawn liquidity, and we took that out yesterday. We tapped into that daily fair value gap. Yeah, overall on NQ I would like to see it go down a bit more, and we are having bearish structure right now, but yesterday it was just a retracement kind of day. So continuing downwards, we've got this is my main drawn liquidity here. We got this H4 fair value gap here, and going down we tapped into the H4 fair value gap before coming down. So yesterday actually I actually really wanted to catch a short to target that low, but as you guys can see here, like after we tapped into that, we pretty much just didn't really come back up. We tapped into that during London session, and I wasn't really trading this during London session, although it would have been a good short to catch just to target this low, because overall price is very bearish. As you guys can see, we tapped into the H4 and respected it, so we were coming down. So it would have been good to catch a short, but I didn't catch a short at all. Going to the 30-minute, we have this 30-minute fair value gap here, and we have a 30-minute fair value gap here as well. So before price opened, which is here 9:30, this candle right here, I actually would have liked to see it like come up into like these, and before it comes down. So it came up into this fair value gap after we have tapped this, so that's why after it came into this fair value gap, I did want to look for shorts, but I also no longer really want to look for shorts because we already took out that low. If we already took out the drawn liquidity, that's when I reevaluate, because if price didn't take out this low and we created equal lows, then I would look for shorts. But now that we have taken this out, I wouldn't be strictly looking for shorts anymore, so that's one of the things I want to talk about. It's really important because previously I would used to still be looking for shorts, right? Because my pre-market analysis tells me that I want to look for shorts. We have these two fair value gaps here. If it taps into that fair value gap, then I will look for shorts. But I didn't look for shorts anymore because we already took out this drawn liquidity. So the next drawn liquidity is elsewhere. It's that high now. So I caught a long here and then targeting around there. So that's why it was like a 1 to 2. And the reason why I targeted that is just because in case it might want to come down, but I wouldn't be looking for shorts to to get it down, unless we have like a 5-minute fair value gap or something. Then maybe I would, but definitely this is one time where I would not use a 1-minute entry for shorts, because the drawn liquidity is no longer as valid as it was because we already took it out. And another reason why I only wanted to look for shorts if it didn't take out this low is because on the higher time frame, it really looked like we wanted to reverse, that we wanted to retrace before going down lower. Because look at this low here, it was like a liquidity sweep here. We got a liquidity sweep here, and at this point in time we haven't really went back up. Like we did tap into a fair value gap, but we didn't really go like deep into it, and I don't think we even reached into the premium of this range. Yeah, like before this 9 p.m. we didn't reach into the premium of that range, so we want it to at least reach into the premium of that range because it swept this liquidity. So this low is not really, it's not a very strong close, right? We wouldn't expect this fair value gap to just push all the way down, because this fair value gap is not that strong because it didn't create a market structure shift, which I've talked about in my market structure shift video and in my fair value gap video. If this leg right here is not strong, we don't see it closing very strongly below then I wouldn't really be looking for this fair value gap that we tapped into to create a strong move as well, because this range itself is not strong. So that's why I didn't look for shorts there anymore. I didn't want to force any trades, but I just wanted to point that out because previously I would be looking for shorts regardless, and I realized that's one of the mistakes that I used to make. So it's really important to reevaluate your bias. So yesterday, instead of catching a continuation trade, which is what I expected to catch when I was doing my pre-market analysis, I caught a retracement trade instead, because that's what the market offered. We saw a retracement trade because we tapped out this low, so that's higher time frame liquidity, right? So we got higher time frame liquidity taken out, and we also tapped into a daily fair value gap, right? I showed you guys prior. So that's 2 higher time frame confluences already. So if I wanted so the reason why I didn't wait for a 1 hour fair value gap, I didn't wait for a 30-minute fair value gap for this trade, I just went straight from the higher time frame liquidity straight to a 1 minute, is because this is a really short scalping trade. Because if I wanted to target all the way up here and all that, then of course I would want to wait for something higher, but I'm only targeting this high. I'm only targeting this small range right here. So I wouldn't really need a 1 hour fair value gap or a 1 hour 30-minute bullish fair value gap to be created, because I only want to target the 30-minute fair value gap. Do you see what I'm saying? Because if I'm targeting a 30-minute fair value gap, then that means I'm allowing for price to do 2 things. If price wants to go down here, come up here and then continue downwards, it can. I would have just caught that retracement trade into that, and it would be fine. If price wants to do this, come back and continue upwards, it also can do that, because then I will still win. You know, so either way, price will still go to this strong liquidity regardless. So that's why I don't really need a 30-minute or 1 hour in this case. I'm using sweep of liquidity and the daily to target a fair value gap, and this is an example when I use a fair value gap as a target as well. So going down, I saw that, you know, we took out this low, and then we started getting this market structure shifts here. As soon as we broke this high, I entered around there. After we broke this high, and after this candle form, so we created the fair value gap. So I took that long there, and I actually put my stops below this right here, and I targeted that. So overall it was like a 1 to 2, and that is my full trade, and it actually went up a lot faster than I expected. It went up in like literally like 5 minutes or something. So that was just a quick scalp that I took. And the reason why I didn't target all the way up there was because I was still thinking, like, what if it went down? So yeah, overall, like in hindsight, obviously it looks like it would take out that high because it's a liquidity sweep, but with just a 1 minute entry, I wouldn't target all the way up there, so I took out my position there. So I only entered 1 contract today, yesterday, so it wasn't really a lot, but either way, it's not like I would have re-entered anyway. So yeah, I wasn't really looking for it to go up there as well, so I wasn't really looking for any longs all the way up there as well. So I think that was just my trade. It was just a quick retracement trade, and I think it's really important to sort of understand the reasoning behind this trade. That's why the analysis itself is such a short section of this video, because the the reasoning of this trade is the reason why I took this trade. Like this, you have to understand why I took this trade. It's not just, I feel like this trade looks a little bit different from my usual trades, but it's still according to my strategy, and it's because we are just putting all these things together, you know, looking at what a retracement trade looks like compared to a continuation trade. So the reason why I put my stop loss below this low is just because if we tap that fair value gap, I want to give it some room. And I think, I'm actually not too sure because I don't actually use breakers that much, but I think this is a breaker where we close below it and then we closed above it as well. So I think, yeah, if price wanted to go back to this breaker, I would allow room for that as well. So that's why I had my stop loss there. Generally, NQ moves pretty efficiently during times like that. So it was during 9:45, so it was before that macro time again. And yeah, so I just wanted to target that in case during that macro time we wanted to come back down, because we took that low, but it still looks like relative equal lows. Like, kind of, price could definitely could have had that reaction off of this fair value gap as well. But the reason why I think it went up instead of going down is just because of that liquidity sweep there, because price is just starting to show weakness. So I think that is the main reason why I continued upwards, and that's also the main reason why I didn't want to push for shorts. I did see like, you know, like 1 minute fair value gaps there, I think. Oh yes, that's why. I was looking here, I kind of did want to enter like a small short position, but we kept respecting bullish fair value gaps. So there was just no reason for me to short at all. All of the bullish fair value gaps we got, they just kept getting respected. So there's not much reason to be forcing your bias onto the market. Make sure to check out the market structure shift video and the fair value gaps video that I've done on the Trading Simplified series, and I'll see you guys in the next video. Bye.